Everyone, welcome back. Today we are looking at Rivian. Rivian ropes in former Apple and Porsche execs to launch the R2 platform. This is a very smart move by Rivian because not all automakers make the same smart decisions. Some electric companies, they tend to use the same knowledge based on the same platform to create completely different vehicles. Tesla has been famous for this. I believe Tesla created the Model S and the Model X on the same platform, and it has never been known to work particularly well. And in most people's opinion, the Model X tend to have a lot more faults. Some say it's due to the Falcon doors, while there are other host of problems. But when I see a company like Rivian bringing in experienced individuals from other popular companies that have had known and great success, such as Apple. Don't forget Porsche. Porsche is known for being one of the best automaker of all time, perhaps one of the greatest automakers of all time. When you're bringing these individuals into your company, it must be for good reasons. It must be because you see a quality that they added to their former company, and you want that quality in your company. And any company that thinks a little bit like Porsche, I'm already keen on it. This is why I particularly like Rivian. I particularly like Polestar as well, because they're focused on quality, not just quantity. Companies like Polestar and Rivian are hyper focused on quality. Quality is everything. Granted, they do this in different ways. They accomplish their goals in different ways. But nevertheless, it works on an individual basis. Now, Rivian has roped in former Apple and Porsche executive Jonas Rienke. This is as the company's new vice president for product management to launch the new R2 platform. So Jonas led product for automation and mobility services. Before that, he worked with the German automaker Porsche and its Porsche digital subsidiary in different product management roles. This is all according to his LinkedIn portfolio. Now, we do have a statement from Rivian CEO RJ Scaringe. And I quote, "We're very happy to welcome Jonas to the Rivian team. His product expertise will help us with the launch of the new platform like the R2 and the continued products improvements of our R1T and R1S. I look forward to working closely together as we tackle this next great wave of product launches." So Rivian R2, during the third quarter earnings call, CFO Claire McDowell announced that R2 platform production will commence in 2026, with product unveiling expected in early 2024. That's this year. I'm so excited for the Rivian R2. I think it's a genius step by Rivian into the correct direction. Granted, 2026 is a long way to wait for the R2 to hit the streets, for production and then to hit the streets. But hopefully we can get these vehicles on the road before 2027. But if Rivian is spending this much time to develop this vehicle, they really wanted to be perfect. And this is what I meant when I say this company is hyper focused on quality. It's not just about quantity. Rather, don't get me wrong, Tesla's strategy focusing on quantity is actually genius in its own way, because Tesla's focused on, let's get as many vehicles on the road as possible, and then we can sell them software updates. Then we can sell them FSD. Then we can sell them a host of different things. Basically, what Teslas are iPhones on wheels. And let's just remember how Apple has utilized the App Store in a genius way to make them billions. And not to mention, Apple charge a percentage for each developer app. So if Apple is charging like 15%, it doesn't matter. If you make 100 million, you're paying 15 million. If you make 200 million, you're still paying 15%. That's 30 million. If you make 400 million, you're still paying 15%. That is 60 million. If you're making 800 million, you're still paying 15%. What is that? 120 million? You get the point. An iPhone on wheels. Tesla is doing what they're doing because it works for them, but perhaps it won't work for every company. Polestar, perhaps it won't work for every company. So we have to think different. Polestar intends to create low volumes of vehicles, but high quality, premium. Branding is everything, like Porsche, while Rivian wants to take on Tesla. Let's be honest, Rivian wants to take on Tesla. And I'm so excited for the day that they manufacture a sedan, affordable and a luxurious sedan, a competitor to the Model S and the Model Y and don't forget the Model 3. They're going to create competitors for these. It's going to take a while, but this company is hyper focused on quality, and quality pays. So let's keep in mind that the R2, while retaining the brand essence, will be more compact and available at a lower price point, which is even even more important because Rivian is starting to realize that consumers are slowly wanting bigger cars, higher cars. And this is not just an American trend. This is happening all across the globe, especially in European markets. This is why the Model Y is such a popular vehicle over the Model 3. Why are people buying more Model Ys than Model 3s? Well, because the Model Y gives you more space and it has great performance. It's now, I've already spoken about some incredible details about the R2 platform and the R2 vehicles that are to come, but what's really incredible is the pricing of these vehicles. But before we get to the pricing, something that I really like about Rivian is their ability to generate funding. This company is one of the few electric companies that have attracted attention, such as Ford, Amazon, is one of the few companies that, and not to mention, it's a company in the USA. I don't think that the USA economy will allow this vehicle brand to fail. So I'm not too worried about Rivian running low on cash. If anything, I'm far beyond optimistic. I expect Rivian as a company to gain significantly more. Keep in mind that this is a public company. So it's different for a public company to gain investments rather than a private company or a company that is leading up to an IPO. Rivian has already done all of that, but I still think they can get a lot more investments for various reasons, of course. There's many other electric vehicle companies out there that are struggling to get funded, and they just don't have what Rivian has. Rivian delivered over 50,000 vehicles last year. That is incredible. They more than doubled based on their 2022 numbers. 2022 numbers were like 20,000. Last year was 50,000. What could they accomplish next? What could they accomplish in 2024? 75 to 80,000? I'm estimating 75 to 80,000. They haven't released figures yet, but that's what I'm estimating. They continue to improve proficiency in building electric vehicles, and their primary market is the US, which means that they don't have to deal with constraints and the difficulties that European brands have to deal with. Right now, there's a lot of shipping issues around the coast of Africa. Some of you might have known what I'm talking about, but that has caused some issues for brands such as Volvo. They ship some of their cars from China. Rivian doesn't have that problem. They're in an economy, in the US economy, that is extremely stable. There's an extreme vacuum of choices. We feel in the sort of areas of 45,000 to 50,000 price range for mid-size electric SUVs. This is what the CEO had to say. He also said, now highlighting the limited options and concentrated market share held by Tesla, whose Model 3 starts at $38,990, while the Model Y begins at $43,990. And this is what I mean. Why is the Model Y more popular than the Model 3? The Model 3 is cheaper, and that's the point of the Model 3. In fact, Tesla tries to drop as much price as possible to make sure that they sell as much of these vehicles as possible. And they're doing this strategically, of course, because, of course, it's iPhone on wheels. Get as many of these technology on the road as possible. Pile a bunch of technology into these vehicles, and then you can activate it at a later date. It's prolific. It's genius. I could see Rivian taking a similar strategy, but I still think that Rivian's main focus is quality. So in December, it was reported that the company trimmed its future battery technology team by nearly 8% as it forecast for R2. This was to have more funds available to develop R2 platform. In November, Rivian brought on board Arnhem Mitsubash, a veteran from Mercedes-Benz Group AG, to serve as the plant manager for its Georgia facility. During the same month, the electric vehicle startup also welcomed Carlo Matarazzo, formerly vice president of manufacturing at Stellantis, North America, as its vice president of logistics. So this is just a few of the most promising information on Rivian. I'll always reiterate with this company, it is definitely at fair value at the moment. You look at the market cap, 15.3 billion in market cap, US dollars, by the way. Let's remind ourselves, how much did this company pull in 3 months last year? Q1, 661 million. Q2, 1.1 billion. So put that together, that's 1.8, 1.9 billion already, plus 1.34 billion in Q3. That's like 3.3, 3.4 billion for Rivian in 3 quarters. So we're looking at the final quarter of last year. We're waiting for earnings calls. We're waiting for this detail to be unveiled. Rivian might have generated over 5 billion last year alone, might have, or close to it, 4.5, 4.8, anywhere around that area, billion last year alone in revenue. Now, this is good because this is all for investing, of course, reinvesting. Expenses right now, it's a lot of capital expenses and it's a lot on R&D. They spend a lot on R&D. And of course, for Q2 last year, they spent a lot of money on general administrative, over 429 million. But that's not quite common for the company. As you can see, throughout 2023, those 3 quarters, Q1, Q2, Q3, except for Q2, Q2 was the highest quarter so far that we can see in capital expenses and, of course, general admission. But as you can see, as the year continued, it looked like they kept on spending more money on R&D. And that made sense because guess what? The R2 is such an important thing for them. So they're spending billions on R&D. And the R2 is just a platform. I think they're aiming for like 2 different vehicles on the R2 platform or more. It's not just a platform for one vehicle. A smaller Rivian SUV. This is such an exciting company for various different reasons, but in my opinion, it is undervalued. Because if they made anywhere close to 5 billion in revenue last year, that means they can make their market cap back in 3 years. 3 years. 3 years. 3 years. Free cash flow profit, we're not focusing on that right now because this company is still ramping up. They're a long way from being positive in free cash flow. Earnings before interest tax, they're a long way before being positive in those areas. I'm not too concerned about that. But once again, I always say this is not financial advice. So I hope you enjoyed this video. Thank you for watching. If you'd like to see more videos on Rivian, leave a like, leave a comment, and I'll see you in our next video. Peace.